We are an historically low point for venture. Some say it might not recover. There's a lot of funds that are unable to raise, and thus obviously are going to look for businesses that have some sort of cash flow.
This is never going to work. No investor's ever going to see the value in this.
F this investor. They have no idea what they're talking about. I played up my own ego. What's going on, everybody? Welcome back to the Funding Table. If you're new here, this is a podcast where we talk all about venture capital, startups, raising money, with the hopes that you avoid the mistakes we made and hopefully have some success as well along the road. My name is Max Goldberg. I'm a two-time exited startup founder, Techstars alum, got my start at a really young age, and have been building in the startup ecosystem ever since. As always, joined with Michael Spitalier. Michael, welcome back to the Funding Table, man.
Thanks, Max. How you doing?
Doing well, man. Coming back off the holidays, very busy.
Love to hear it. Yeah, better to be busy than bored. Yeah.
That is for sure.
Uh, yeah. So for anyone listening that doesn't know me, I run a firm called First Time Founder Capital, brought in by early stage founders, typically pre-seed to Series A to get them to the point where they're investable and investor ready. Then on the other side of the business, I have a network of active investors that I build relationships with, understand what their thesis is, and then send along clients that are a fit within that fund. So anywhere from $1,000 angel checks all the way up to 500 million pre-IPO and up to into the billions, just with some of those funds there.
Well, that's certainly impressive, and I guess parlays exactly into what we're talking about today, which is all about our stories, pitching investors, both of us at a really young age, and of course the clients that we've worked with to help get their rounds done, typically are in the early, mid, late 20s, and it's a lot, and there's a lot to learn from the story. So. First and foremost, I'd love to hear a little bit about your first experiences pitching VCs. Who was the fund? Who was the investor? Did you get a yes?
Yeah, so we ended up, man, I started my first company in college, about 6 months before college ended with a couple of friends. We all moved out to Denver, where the CEO at the time lived, to all live together, sort of like a Silicon Valley type of scenario. And we, just kept chugging away. It was an incredible experience, but the first investor that I ever pitched to with the company, that our company ever pitched to was the CMO of a very large company out there.
What company
Um,
was it?
it was Dell, I believe.
Wow. Wow.
Yeah, so that was a bit terrifying. I was 20 years old, maybe 21. And we made all the classic mistakes, right? I mean, we had a pitch deck that had more words than a novel on every slide. We were practicing to death. I mean, it was quite rough. He was a very kind man. And sat there and gave us a lot of feedback, but I don't think we never got the pure yes. We never closed that particular person, but man, what a learning experience that was. What about your first time?
So my first time, so it's a little bit of an interesting story. I'd say the first legit, professional investor I spoke with was Techstars, and my who would then become my Techstars MD. He had sold his company to Google years ago. He had taken a company public early in his career. Prior to that, mostly family connections, potentially local successful entrepreneurs in the Boston area, which is where I'm from. But not until Techstars and then in that program, pitching real venture funds. I hadn't really had any experience prior. Of course, I had some yeses from those local connections. Despite that looking like a friends and family round, it certainly helped boost the ego a little bit. I felt pretty comfortable when it came to pitching the first real fund. Post Techstars, I was a mess. I had the energy of a weakling. I certainly didn't realize how much of, control I needed to have over the conversation and the narrative. I was asking, not telling why the investment should be done now. And if they're not in, they're going to miss the train. So I think, you have these no's early on and they start to build some real character. Of course, put you in the right direction. But it's kind of like going to Vegas, where I think if you got your first yes from a venture fund, you're never going to truly know, what to expect, which is similar to when you go to Vegas, you probably want to lose your first time so you don't get in the habit of winning and keep going back. So it was a crazy experience, but have learned quite a lot since.
Do you think on that Vegas point, do you think that you learn more from the no's than you do the yeses?
I'd like to say yes. I'd like to say yes. Although when you're dealing with, true venture capitalists, you have to expect, at least a 90% miss rate when you are a first-time founder without an exit, without a track record. Fortunately, I had some of those things, which was exciting and helped sweeten the deal. But people are going to pass for a variety of reasons, and the investors are wrong far more than they are right. So I think it's a matter of taking the thematic feedback, taking an average of what you are hearing, and using that as what pushes you forward as constructive feedback versus taking no's at face value. It's just going to crush your soul as a founder raising money. I'm not sure if you agree with that.
I do. I mean, I think that you have to really build a thick skin. You have to get that strong jaw because I mean, what was the quote that you posted yesterday? I think it's extremely pertinent to this.
Yeah, it was a Sean Parker quote. And for those that don't follow me on Instagram, you should go ahead and do that at Max J. Goldberg, link in the bio. Sorry, had to do a shameless plug, Michael. Michael's on Instagram too. So go check him out, of course. His information will be in the description as well. I think this Sean Parker quote, which basically compares entrepreneurship to getting punched in the face over and over again, and eventually you start to like the taste of your own blood. And I had some comments actually, people not understanding what that quote meant, and that's astonishing to me with my experience, considering that's exactly what it's like. You eventually learn because you're going to be failing, you're going to be getting nonstop rejection, right? You're building the future when very few people can see it. There's going to be lots of downs, far more downs than there will be ups. And eventually you start to like that struggle. Like you start to like that feeling because either A, you're about to, you're at a local minimum and you're about to grow. But more so, it's part of the game. Like rejection is part of this game, and if you don't like it, you don't have entrepreneurial DNA. I think it's simply as simple as that.
Yeah, no, I couldn't agree more. And I think that back to my point, you really got to build that thick skin because you will get a lot of pushback. You will get a lot of no's. The amount of times I've pitched an investor that I thought was a perfect fit.
Yep.
And they said no. I mean, that can be devastating. Right? You come in with the mentality that you're gonna grab them, get them on your cap table, and they're gonna open up all these doors, and it's gonna be fantastic. They'll be the perfect partners. And then when they pass, it's awful, right? It's a tough moment, but you have to
Yes.
keep going. You can't just stop at that one no and say, all right, I quit. Obviously you can, but you're never going to be successful that way,
Yep.
right?
And that's part of the test. Like this, it's all a game. Building companies, the more you view it as a game, right? There are levels. Some levels are very tough to beat. But if you can start winning the game, you can beat the game. And some people are good at different games, but ultimately, like there is struggle. There's going to be resistance. There are obstacles in your way. But fortunately, you have success. Like it can feel far, but it can also be really close. You only need one yes or two yeses to accelerate around to subscription. So, like in the spirit of just truly understanding the game you're playing, you have to be willing to accept that there will be obstacles that are there, and it's your job to keep playing until you get around them. And I think with that being said, you obviously had an experience with a major executive, at Dell as your first investor. Where I pitched a traditional fund. I'm curious, when you had that first rejection, what was your immediate gut instinct? Like, did you want to throw in the towel? Were you done? Were other people pushing you to keep going? Like, what was sort of your takeaway from that meeting, and how did you proceed?
It's a really good question. So, I mean, it was quite a while ago, so I can't tell you with any specific certainty here, but I've experienced it again over and over, and I think that each time there's a moment of being completely demoralized,
Yeah.
right? Especially with that first one, we put in so much prep work. to get there, and then we didn't get that yes, and of course you have that immediate feeling of like this is never going to work. No investor's ever going to see the value in this. This is too complicated. This is too the incumbents are too big.
Yep.
We were in the entertainment space just like you. So you know that struggle of
Yes.
investors coming in and saying that the incumbents are just going to squash you like a
Why can't
bug.
TikTok do this? Why can't Google do this?
Yeah.
Endless.
Man, yeah. But it's the true test, like you said, for founders, right? You get that no, and how quickly can you build yourself back up? How quickly can you stand back up after getting that knockout and move forward, and continue to build traction, understand and really take what they said as a response, the feedback they gave you, and distill down what makes sense for you, your company, and what makes sense or what doesn't make sense because they didn't get the full picture. They're not in it every day, right? So
Yeah.
you're going to have those investors that don't fully understand, and you got to take that feedback and turn your pitch around to help them understand, help future investors understand.
I think it's an
What?
interesting point, because you're talking about investors not understanding. And I think if you can break out what that general feedback that a lot of founders can relate to, like they just didn't understand. Is it that you weren't clear in the pitch, the opportunity, the market, your team, and so on? Or was it more so that they just don't agree with your thesis or they don't have conviction in what you're building? And I think as a novice to fundraising, it's very key to break down that the reason they should be denying you or not, or it's too early, should not be because you couldn't explain your business clearly in simple terms without jargon. It's more so you want them to have to decide whether it fits their thesis and they have conviction in what you're doing or not, but it should never be because they didn't understand it. And if you're getting those lack of clarity sort of objections where they look confused, they're asking questions that you thought you answered or preemptively discussed, that means your pitch and your deck are not clear enough and they're not simple enough. What you want some questions of saying, I don't know if this is going to work, or I don't think it's going to play out, in this industry like you think. And that's okay. That's, the greats have all experienced that feedback, and very few people are probably going to see what you see, right? And I think that that's interesting. Also, it sounded like your gut reaction was to be like, have this self-doubt, which is interesting. I wonder how that like actually manifested with, your team and out loud. Like, were you clear about that self-doubt that you might have had, that discouragement? For me, my natural instinct as a 20-year-old then turning 21 was like, F this investor. They have no idea what they're talking about. I played up my own ego. And I think that can be dangerous, but also is reassuring and sort of the energy you do need to be successful because it could be that the investor you're talking with has no idea what they're talking about. And I
Yeah.
feel like there's got to be a good balance there where it's constructive feedback that you take to heart and reflect, but also you have to be a little bit of a narcissist to do this whole startup game anyways.
Yeah, 100%. I mean, if you take that self-doubt to that next investor pitch, it's over before it starts. Right?
Correct.
You have to come in, you have to be cocky a little bit. You don't want to be a jerk, but you also can't come in and seem low energy. You can't show them that you're not excited about your own
Yep.
business because why would they get excited?
Totally. Totally. And I think another point on that note, just changing focus a little bit, but there's a ton of entrepreneurs that come from various, economic backgrounds, have various levels of access and privilege, and we could acknowledge that we probably had more than some others that are raising, right? There's always someone that's farther along and worse off than you. But on that conviction note, I find that a lot of founders will go to venture capitalists. They'll ask, for their money, this professional dollars at immense risk to the investor. But then if you think about, and they turn around and say, well, have you raised friends and family money, which is somewhat of a hot button item in venture. I think we actually disagree on this, which is interesting. But from my perception, how are you going to ask a professional to risk their money when you couldn't even convince the people closest to you to put something in? Right? There's more skin in the game. There's more to lose, which should, in some capacity, reduce the risk for the investor. I know you kind of have a little bit of a different take on this. I'm curious what you think just about friends and family, like before you make that pitch. Are there any things you can do that, tilt the odds in your favor?
That's a tough question. I mean, I think that if you have the opportunity to get some friends and family, it's going to put you in a much better position to raise those professional dollars because it if you're a good founder, it will likely result in traction,
Yeah.
right? But I do think that there, like you said, there are going to be some founders that have exceptional ideas that just simply don't have
Hmm.
anyone in their family or their network that can provide any sort of substantial cash that's going to result in anything worthwhile.
Hmm.
So
Which is okay.
um, it
Right.
is, yeah, it's absolutely okay. You know, we certainly shouldn't disqualify people from starting companies if they're
Yeah.
not from wealthy families or what have you. Um, I do think in that scenario, though, you have to be a little bit scrappier.
Hmm.
You have to push for more traction. You maybe have to go to events and be um, a little bit more cognizant and purposeful with your networking. Try and find those people in your network, right? Try and talk to people that are in the industry that have succeeded in the industry that you're in. You got to be a little bit more punchy, I think.
Yeah.
But
Yeah.
I firmly believe that, you know, if an investor comes in and they ask if you've raised friends and family, um, and you can point to that scrappiness outside of the friends and family, if they disqualify you, that's not the right investor for you.
I would agree.
Yeah. I'm curious to know. So, moving to a little bit of a different topic, you and I have seen hundreds, if not thousands, of pitches. Whether that be, you know, the first pitch, we've seen some clients talk to do some mock pitches for investors. We've obviously pitched a bunch ourselves. What would you say are some immediate green or red flags investors look for in those first 5 minutes?
Yeah. So
Or what's
great
something
question.
you look for in those first 5 minutes when we're talking to new potential clients?
It's a great question, and I need to answer that first by talking about how most investors and myself personally would approach evaluating a deal and a founder. I think a lot of founders who have not raised before have this common misconception that investors are only looking for green flags or searching for qualifiers. And I think from our experience dealing with funds, a lot of the time, they're going to have an initial reaction, and then if that's positive, they're actually going to be looking out for red flags or disqualifiers, right? Things that might come up in diligence, potentially dishonesty, maybe a lack of thinking through the business and, on a macro and certainly like grassroots micro level. So I think first and foremost, as a founder, your duty and your preparation is to make sure you have all the moving pieces you need. You need your deck, you need your financial model, you need your data room, you need, it's XYZ. And not having those is an immediate way to sort of lose out. If I'm talking to a founder and they don't know what a financial model is, you know, yes, some people don't have a financial or accounting background. That's okay, but it's not an excuse because you're going to ask someone for their money and you need to be prepared. So I think the very first thing is if someone's missing one of the key components of a raise, or they don't have a deck, or their deck is terrible, immediately I would assume they don't care enough, or two, they likely have not raised any money from anyone else. So no one wants to be the first money in, right? That's the struggle. I think in terms of green flags, something we talk about a lot with our clients, and for those that are listening, there's a link in the bio to, or the link in the description to apply to work with Michael and I. But from the educational side, you need to understand how venture capital works. So if someone comes to me and they don't understand what is required to generate the returns that are the prerequisite to investing in this asset class, which is inherently probably the riskiest, types of investments you can make, with the likely case going to zero. I'm looking for people that are high beta, right? They are inherently volatile. They have there's either clear upside or there's clear downside, but it's up to me to make the assessment of which way I think it could go. Number two, I am looking for someone who's obsessed with what they're building. So low energy, even if that's your personality, that's not the type of personality that I would want to invest in because you clearly don't, bleed for whatever you're working on, or at least not enough to fake it, right? Fake the energy if you have to. And then I think the third is someone that is, not cognizant of competitors.
Oh
I think
yeah.
talking down competitors. We're in a market of one. No, you're not. It's 2025. There's thousands of companies, launching every day in every vertical imaginable. So I'd really want them to embrace the competition. And I don't even need them to have some sort of like 100x, innovation. It can be something that's smaller in magnitude, but is clearly different and better. And the more eloquently you can explain that difference, even if you're not better in some capacities, but why it's different, that can allow me or an investor to see how the market landscape looks and like where you fit into that picture, right? Those are
Yeah.
some things I look for. What about you?
Yeah, I think those are extremely potent. I always tell founders if you have a conversation with an investor and they're interested and they tell you to pass along the data room and you make them wait
Yeah.
because you don't have a data room ready, you may not know what a data room is. You don't know what is required to be in there. The second you tell them to wait for that you'll get it to them and don't send it right away, a clock starts, right? Right.
Yep.
You have these investors that are seeing deals constantly. They're going to start to forget about you. You may lose your potential investment there. So you need to have everything prepared. The second point you mentioned was competition. If I have a founder come to me and say, we have absolutely no competition, all I can think is you are not prepared. You have not done the research. And if you've not done the research, what else are you not researching?
Or you're just
Right.
flat out
So,
dishonest, which is
yeah,
even.
yeah. Yeah, I think that the passion is really exceptional. This actually turns into the next question I had, something that we have founders ask us quite constantly. Um, I think that the passion is exceptionally important. The vision is exceptionally important, especially in early stage. When you're pitching to investors pre-seed and seed, it's all about the vision, right? Of course, you can point to traction if you have it, that's exceptional. But once you get closer to Series A and Series B and beyond, is a lot more about the actual statistics, the financials. So if you can come in and pitch me on your vision and it's really beautiful, and you lay out the landscape and show me the future, what the future could look like with your company, that's a huge green flag for me. And if you come in and you try and explain your vision to me and I just simply don't understand it, it's all gibberish, then there's really that's going to be a long uphill battle. So I am curious to know, we have founders ask us this all the time. Do you think in this current landscape, revenue is a requirement to get investment?
I didn't have revenue. Um, the venture and startup ecosystem is cyclical. It depends on interest rates, it depends on, geopolitical factors, XYZ, and so on. We are in a historically low point for venture. Some say it might not recover. There's a lot of funds that are unable to raise, and thus, obviously, are going to look for businesses that have some sort of cash flow. I think revenue is increasingly becoming more of a requirement when you have companies like Lovable.dev, which we just saw, as of days ago, Replit, companies that are going from low, ARR intervals, low, maybe even 1 million to like 50 million, 60 million, 100 million. These companies are growing so quickly. So it definitely puts pressure on investors to weed out the deals that are growing faster because that's gonna create a much more higher likelihood of return for them. However, you have other companies, and for every revenue producing company we can talk about, we've had one that, like Instagram, that had never, yeah, turned a dollar before $1 billion acquisition. So I think it's really important to recognize the time you're in. Now, I think if you don't have revenue, you're going to have something in truly of equal magnitude in another area to compensate for that. So you might be the one person, that has experience to work on something, or more importantly, like a quote I heard recently is like the alpha at this stage, like your ability to generate an outsized return for investors and obviously yourself and your shareholders, like you need to feel the problem in your bones. You need to know the problem better than pretty much everyone. And if you don't feel it in your bones, you're not going to have the passion to explain this thing with like real conviction. And I think that that's the most astonishing thing when we speak to founders who they claim to have, this problem in their bones. They just know the customer. They know what needs to be done, right? They're obsessed. And then they're talking in a monotoned way, or they're not really showing as much, they're not leaning in. And that's a huge problem because if you felt the problem in your bones, you would be very clear in the way you speak and the tone and the vibe you give off that this is your life's work. There's no very successful founder. There are no examples where they don't have an incredible ability to storytell. They don't have an incredible ability to recruit people to see the vision, right? And on the same token, those successful people are also really good at polarizing other people. They also have groups of people that don't believe and consistently hate on them. And I think when you have the right charisma, you're going to have people despise you, one, two, not believe in what you're doing. But on this, the flip side of the coin, you're going to have the super fans, the cult. So when in doubt, always go to the extreme in venture because that's where the opportunity will lie.
Yeah, that's a very interesting point. And I really like what you said about if you don't have revenue, you need to have some traction piece that is just as important or just as
Yeah.
exciting. Um, yeah, I mean, I think that if you don't have revenue, one of the big questions you're going to get is, are your customers actually willing to pay? Right.
Yep.
So I work with a bunch of companies that do jump into market with free pilots, right? And those are customers, but that's not resulting in revenue right away. Or if you have a pilot that you don't have any sort of contract in place, that it is going to result in revenue generation, right? So if you come to an investor and you don't have the revenue to point to, try and figure out a way to prove that the customers are going to be willing to pay, right? Because you
Yeah.
cannot have revenue now and they can see the vision, but if your customers aren't willing to pay, then you're not going to have revenue in 12 months and good luck raising that next round.
Yeah, and some founders will then say, well, part of our advantage is not charging customers so that we can iterate on the product, we can grow a bit faster. Really, it comes down to they're afraid to get no, right? They're afraid to hear the rejection. Right? What if they don't want to work with us now because we ask them for something? You take a classic like a WhatsApp example where they were scaling really quickly for free, and they were experiencing too much scale and increasing costs, and the founders decided to charge users $1, which certainly reduced the amount of traffic they were getting and new users. They had a substantial amount of revenue coming in. I mean, volume wise, for the user base, but $1 per user is not much, right? When we're talking about venture outcomes. However, it reduced the scale and created a segment of people that truly love the product. And I think that's something that until recently I've really haven't come to terms with. The fact is you'd rather fewer customers paying you more money than more customers paying you less. All else held equal, that is a much better business model, right? So if you had 5 pilot partners, going to them and asking them even to put a refundable deposit down of a very small amount of money will not only show that willingness to pay to investors and yourself, which is most important, but it's also going to create the true cohort that ultimately will pay more later on as you continue to iterate. So I think the key is not to juice earnings out of every user or customer, especially a pre-seed and seed. I think the key is to create the business model and the product that's going to scale and play the long game there. And I think a lot of these companies that are growing these revenues super quickly, despite it seeming super sexy and they're all the talk right now, who knows how sticky and enduring that revenue is? We don't know yet.
Yeah.
We just
And
don't know.
the quality of that revenue. Yeah.
Right.
Exceptional
Right.
points.
Right. I'm curious just to wrap up here. So we're obviously entering what is a very new startup ecosystem again, like the rise of one, two, three men or women companies doing, a tremendous amount of traction at lower costs, all the things that were taught business, in a business school environment, right? Just fundamentally, the fundamentals are getting way stronger. What do you think is going to be the most important thing for founders who might not have that just world class traction yet? What do you think is the greatest area specifically for those founders to lean into to get their first commitments? Like, is it team? Is it the conviction to the problem or solution? Is it, what is it? What do you think is the single greatest area where founders can compensate for the lack of revenue or that hard traction? If you had to choose one, I know it's tough.
I had to choose one. The first one that comes to mind is grit, and I think that comes in with the team as well. Um, you know, it's founders have to work even harder if they're not those founders that are
Yeah.
moving at lightning speeds. So having that grit as a founder, I think, is exceptionally important, right? Taking those punches on the jaw, really going out there, finding the customers, talking to the customers. We've had founders come to us and say, we've interviewed thousands of potential customers and really figured out and nailed that pain point. Uh, I think that that's going to be that plays into your conviction as a founder, right? You can come in and say, look, we are all in on this because we've talked to our customers significantly. Um, I think that if you don't have grit as a founder, you're not going to survive.
I agree with that, and I think to tie a bow on this, it's up to you as the founder, which is what you learn as you pitch, right? And as you inevitably get no's, it's up to you to define the narrative. It's up to you to control the conversation with investors. So, yeah, if you're going to let investors walk all over you and compare you to cursors of the world and the fastest growing startups or, the major players, you're doomed because they've already anchored you there. So I think it's key as a salesperson, which is fundraising, to anchor, right, the narrative. Like we are comparing ourselves to these other companies that also don't have meaningful revenues. But what we're doing differently is, we have 100, potential customers. They're on some sort of pilot or they're free users, but they've agreed to cop on the phone with us twice a week, every week until they become a paying customer. So I think that the power is in showing what actually is important to get to that next level and not letting investors tell you what that next level is. You're not going to be Apple the next day, nor are you expected to be. So if you're speaking to that kind of investor and that's what the conversation's like, you've already missed the opportunity to show what is actually important right now. And as the founder, you need to know that because you work on the business every day, presumably, and then the investor does not, right? I think that with that being said, always an interesting conversation, Michael. Again, for those of you that are new to the pod, I would appreciate it if you like and comment, as well as subscribe below. It really helps us reach more founders. If you have any sorts of questions about your specific raise, you're gearing up to a raise, feel free to drop a comment below. Michael and I respond to each and every one of them. And again, last but not least, if you are an early stage founder, anywhere from pre-seed, seed, and as well as Series A, we've been doing some work there. Michael and I would be happy to talk about helping you get your round done. You can go to goldcapitalconsulting.com. Again, it's linked below in the description, and you'll be able to get more information there. But Michael, appreciate it. And until next week, man, thank you.
Have a good one.
You as well. Bye.